Hi, good evening. Today's Monday, February 1st, and the market was up today as Victor predicted Friday. I recommend you check out that video from Friday. We had a very interesting discussion of statistical observations on Monday after a big down Friday. And according to it, the market behaved as predicted, and we had a huge update today. Even though S&P 500 opened up with a gap down Sunday evening and traded as low as 36.56, but it was the usual stop run to make money for the infrastructure. And after it got its fill, the market was up pretty much consistently throughout the whole day and had a massive 120 points rally. And it basically negated the whole decline from Friday. Nasdaq had a similar trajectory and was up a staggering almost 550 points since Sunday night low. And it closed up almost 2.5%, closing higher than the Friday open. And another notable mover today was silver. This is where the WallStreetBets and the Robinhood boys are moving now to squeeze silver instead of the GME. Silver futures opened up Sunday night up 7% and closed up over 8%. And now there is a wedge in between the WallStreetBets boys because some of them really don't want to squeeze silver because apparently Citadel, their arch nemesis, owns a lot of it and they're the beneficiary of the squeeze. Yet they want to make money, so they're moving on from GME. Even though the silver margins were increased by some brokers, and it still was up, closing 8%. And WallStreetBets army has grown even more over the weekend. Now it has up to 8 million registered users, basically doubling in the last couple of days. As Zero Hedge calls it, it has become the biggest distributed hedge fund in the world. And Mark Cuban calls it that buy and trade together can be a whole lot more powerful than buy and hold. So basically, whoever controls the WallStreetBets boys will be the marginal price setter because by various estimates, they may have as much as 70 billion in buying power. 70 billion. That's a lot of money to move the market if they focus on one security. But it wasn't just WallStreetBets who was putting the squeeze on GME. I think it needs to be mentioned that various high frequency trading hedge funds were piggybacking on that move because they have multiple algos, momentum strategies that are deployed that pick up those buys and then they just basically piggyback on them. And today, as the market rallied, GME has actually sold off. It was trading as high as 383, but ended up being down over 30% since Friday's close and closed down at 225 and down even more after hours. It remains to be seen if the party is over or if another squeeze is coming, because I know that many people who have just joined the WallStreetBets site, they're just opening up their accounts and they're waiting for the verifications, so it may take time. But on the other hand, the short interest for the GME is down to 60% from 140%, and the borrow rate is down as well. So now it's not as easy to do that squeeze anymore. But as the motto of WallStreetBets is, we can remain retarded longer than you can remain solvent. So we'll see. Even Stephen Cohen closed his Twitter account after alleged threats. As I was saying a few days ago, the stuff he was tweeting was totally in poor taste, and the public didn't like it either. He's also allegedly opening up his fund to new cash, to raise cash because of his GME losses. Another victim of GME squeeze was, ironically, Robinhood broker. Over the weekend, they have raised another 2.4 billion from their shareholders and put the IPO on hold. Due to their terrible risk management, they needed to increase their capital. And they may need even more of it as the users keep abandoning them. To close Robinhood account is trending on Google right now in very large numbers. And Robinhood CEO was interviewed by Elon Musk over the weekend. And according to this interview, Robinhood CEO did not look so good because he really couldn't even figure out the capital demands of his own company. He was saying that they're based on VAR, and they had no choice to restrict trading. And apparently, according to him, there is no transparency behind the formula for the capital requirements they have. He actually said it's not a publicly shared formula. So he doesn't even know how his capital requirements are calculated. It's really amazing how he runs his company. Anyway, Victor, what do you make of the markets today?
Well, you've given a very good summary of what has transpired. And I think it's relevant that last Friday was the worst day in 3 months. And today was the best day in 3 months. So it sort of is typical for, strangely, when there's a big Friday decline, it has usually engendered a big Monday decline in the wee hours. But that decline occurred at 6 o'clock Eastern Standard, and it was a terribly unusual and costly move for those who were under-margined and who couldn't take the loss. But within a half hour, it was back to the constructor level, 3,700. And then it went right through the Soji level. So we went through a constructor level and a Soji level. We got all the way up to 3770. And in addition to all the charlatans and people who were looking for a big Monday down after Friday down, there are a lot of people who were bearish because the January barometer was negative. In fact, at the open at 6 o'clock, the market, I was expecting to see the word correction flashing across the screen because the S&P was down about 6.5% from the high of 38.50 and so on, got down to 36.40. So we had 200. We had a nice 6% decline. But of course, none of the easy hacks work. You can't make money, easy money in Wall Street. We've discussed several principles. Never try to make money the same way twice. We said never short. I feel sorry for those people who have shorted GameStop. The other major principle is that the house cannot lose. I wish the public would understand that they're not getting free commissions. It's not easy to trade because of the free commissions. The large brokerage firms paid $650 million to the high frequency firms that took their orders. If they were paid $650 million, God, the good one knows how much the infrastructure made on those commissions. But what they don't pay in commissions, they pay double in bid-ask spread. When you put all those principles together, the idea that the public can squeeze, can go on squeezing, I think is a non-starter. They will have to succumb, they'll have to lose money by trying to play the game of those with more capital and trying to somehow suppress them. Eventually, that will be lost. I think it's particularly dangerous when they do it in something like silver.
Right.
They tried that 22 years ago, and a lot of the members are short silver. I've seen some statistics that show that it's mainly the miners and the banks that are short the silver, but the big boys are short silver, and there's no way that they're going to let the public in for an easy gain. I remember once when I was trading silver, it was down to $8, and one of the members said, I know that $8 seems low to you, but to us it seems very high because it was $4 for 20 or 30 years. And the bigs will make regulations and they'll create margin calls and
Right.
demands for capital that will eventually take money from the weak and give to the strong, as is inevitable and as is the basic fact of the markets. Now, as to what the rise on Monday signifies, except for the fact that never try to make money the same way twice, and it can't make easy money. It's a good warning. And looking at how the big Mondays affect the employment number, which will come on Friday, there's only been one Monday as big as this. Of course, we had 3 Mondays down in a row, so that was one reason that the Monday was up, because people were trying to make easy money by doing it the same way they had for a few weeks in a row. But there's only been one Monday up as much as this, and it led to a very bad employment number. Now, what's happening on the woke front? We haven't heard any.
Well,
You've been very, very cautious and not discussing the woke today.
right. We just want our YouTube channel to get approved by YouTube.
Yeah, we're lucky not to be extinct between the powers that be not liking the message. But one thing that I think is significant is all the armed ROTC, National Guard, policemen in Washington. It looks like a war zone.
Right.
And why are they there? They're not there. There's not any threat really, but they're there to signify the divisiveness of the January 6th protests. I mean, they're not there for public protection, but they are there to signify that the government agenda must be sacrosanct and can't have Republicans threatening democracy.
Well, Dr. Fauci has reappeared today, and a week after he was saying wear 2 masks, now he's saying it won't make a difference. So the whole science to me is really fascinating. Just to recap, when the pandemic started, Fauci was saying don't wear masks at all. They don't make a difference. Then all of a sudden he said we must wear them. Then we must wear 2 of them. And now he's saying, well, we don't know. It won't make a difference. And so after all of this, they want us to trust the science while the chief scientist himself could not figure out the science and what it says. He keeps changing his mind.
Of course, there are different statistics and different studies that come, and I'm sure he can relate his current thinking. But we know for sure that everything he said before November election
Right.
was consistent with sinking Trump. And the news on the progress on the vaccines was held back until afterwards. And now everything that he's saying is, you have to admire him because of course he wrote a love letter to Hillary saying that the fact that she was able to withstand the interrogation,
Right.
showed that she was extremely healthy and extremely fit. It's nice that we can make a diagnosis like that from a distance.
Mm-hmm.
But everything that we can't attribute Dr. Fauci's views to a change in the statistics. It's due to a change in how it's going to affect the stimulus bill and how it's going to affect the progressive agenda.
Right, but that's the whole point of the Democratic Party lately. They keep twisting the statistics and cherry picking the studies that are convenient to them, and then they want us to trust the science. And if you question their statistics or their methods, they're saying that you don't trust the science, you're anti-scientist. So the whole conversation just revolves, you're either with us or you're against us. It's nothing to do with science anymore. It hasn't been for a while.
Another ridiculous and misleading number was reported today. The manufacturing questioned each month. They reported that the manufacturing was way up. Of course, manufacturing is only about 20% of the GNP now. Services are much more important. But that had it was like wire to wire today. Everything was up, but for the third time in a row, we had a weak close. The end of trading at 1615 was another weak close. There wasn't a finality. It wasn't. We're at a 15-day low in the stock market, and we're about 5 days away from an all-time high. And the January barometer is switching around just to get people to do the wrong thing. They'll get the moving average down. People will sell, they'll get the moving average up. Everything's done to make the public churn and do the wrong thing, and to try to twist them out of the position. I was reading my ecology books on the relation between species and how groups of one species can become very strong. As an example, spiders find crickets prey, but yet a juvenile spider cannot kill a cricket, so that when the spiders get together, they're strong enough to kill the crickets. Same thing with ants. We have all the the wild beasts form strong groups to protect themselves from the hyenas and the lions, and ants go on their marches, their warlike marches that destroys everything in their wake. I remember my father used to read to me a story called Lanigan and the Ants, which is a good farmer in Africa tried to withstand the marches of the ants, but he couldn't because they were so numerous and they were so effective. And the Robinhood, these 6 million people that have just opened accounts, who eventually will lose and are playing a losing game. They're like the ants, and they can become very powerful, but they go against the purpose of markets, which is for the weak to make a contribution to the strong. And I would just hope that they follow our guideline, which is to buy and hold, never to short. And by the end of the year, we can expect to see that normal 10% gain. But along the way, you have a day like Friday and Monday, the moves within the day are 10%. So if you do the wrong thing and you're trying to outguess the strong, you can lose so much.
Right. I have just put up a chart that small options traders nearly doubled the amount of money they spent on buying call options last week. So that's 44 billion this month alone. You could see the trajectory from many years back, how insane the call buys are right now. It's really staggering. And I think it's one of the indicators of the current sentiment, as well as the money that the government has been sending to people, plus the pandemic with everything being closed and everybody is just being bored and I guess turning into Wall Street bets and trading. But I don't know how this is going to end, but the trajectory just looks scary, the amount of call
Well,
options.
they were buying the calls at a 34% volatility, so that they need a day or two like this just to break even. It won't help them except in terms of the likelihood of getting closed out by margin calls.
Right.
I wouldn't expect Robinhood to be able to finesse all these margin calls. They're working against the fact that their customers are against the higher feeders in the trophic sphere, and also the infrastructure, the members and the banks are not going to be very solicitous of them. So even though the market will continue its 50,000-fold a century drift upwards. Be careful with following the herds. I always turn to my friend Francis Galton, who traveled through Africa and was the greatest statistician of all time, possibly, and inventor of regression and weather maps and composite photography and cross classifications. He also did some great work in heredity, but he always said that the main problem was he couldn't find any oxen that would lead the pack. They all wanted to follow, and he says the humans are very much like the oxen. They have a lot of herd-like behavior in them, and we're seeing a lot of herd-like behavior now, and that's not cricket.
Right, and even with silver that they're trying to squeeze, many people are buying silver ETF without really realizing that this is the ETF itself has a prospectus that is designed specifically to protect the issuer of the ETF. And in the prospectus, it even says that the price of the shares may be less than the value of the silver representing them, or the price of the shares may fall or otherwise diverge from the NAV. And so even in the prospectus of the silver, they're saying that the price of the instrument could be completely different from the price of physical silver or futures or pretty much anything. So the ETF itself is not really connected to the price of actual silver, at least not all the time.
Well, let's try to rise above the ephemeral aspects of the market that are designed to help the strong at the expense of the weak, and follow some general principles and follow the numbers, and we'll see what happens. I have no prediction for tomorrow. If this week close puts everything up in the air. But my prediction is that you will give us another vigorous summary of the market tomorrow. Have a nice day. Thank you very much.
Thank you. Bye-bye.